Hello traders, Jason here with swinghigh.com. It is Thursday, February 4th, 2010, and this is your halftime report. I'm giving you a halftime report today because I won't be able to give a post-market analysis at 4 when the markets close because I'll be practicing for a stock trading competition. What would you expect? Another reason is because the markets are down really big today. Here's the S&P 500 tracking ETF, the SPY daily chart. As you can see, we did put in a swing low and then a swing high, and that swing high was very, very weak. Low volume, 2 bars. And then we reversed, and now today we're testing, well, we already shot below the previous swing low, which is bad to see for the markets. It's bearish. And right now we're holding up at the 107.20 mark, and that's acting as support. We opened just under 109 and broke through 108 with a lot of conviction. So far, volume is average for the entire day. So we still have, what, 3.5 hours to the close. Volume could be significant today. Let's go to the intraday action, 15-minute chart here. As you can see, we had a big gap down. Zoom out a bit. Big gap down from 109.90 area down just under 109. It didn't take us very long, about a half hour to cover between 109 and 108, and then held up there for a tiny, a brief pause, and pretty much broke through that. And now we're stalling out a little bit, slowing down, but still selling off, and certainly holding up here at the 107.20 mark on SPY. As you can see, there are multiple tests of this support here. So what I expect, we could either get a low base and close on the low, or get a low base and break down, or we could put in a swing low here and come back up and test 108. I don't see us closing above 108 on SPY. There's just too much conviction to the downside. Let's take a quick run around the markets. The S&P is down about 2.3%, the Dow about 2%, the NASDAQ 2.2%, the financials 3.2% on the financials, big move down there, and the Russell is 2.5. So some the Russells and financials are taking the lead today, leading us to the downside, and that's a nice low base on the Russells right there. Let's take a look at the market internals. The VIX, wow, almost 17% pop in the VIX, testing these highs again of 25.30, at least on the short-term basis. Yeah, that is a bull flag breakout right there. I'll show you that. We have this falling wedge type formation, or a bull flag. However you want to draw it. You can draw it a couple ways. And definitely showing a breakout to the upside for the VIX. Let's take a look at the other market internals now. The TRIN. Whoa, very, very bearish on the TRIN. Almost overly bearish, but 2.3, definitely a lot of volume flowing into stocks on the decline rather than the rise. The TRIN Q is closer to neutral, actually, just under the bearish mark at 1.2. Still leaning towards the bearish side, though. Let's take a look at gold. Wow. Gold is down 4% today. That's huge. And the dollar up 0.64%. So everything across the board seems to be pointing in the direction of more downside for the markets. And back to the S&P daily, we'll finish with this. If we break this 107 mark with conviction, wow. The next stop could be 103.50. Expect some support at 105 because it's a nice round number, 1050. But things are looking bearish, very, very bearish. This rising wedge breakdown is more than confirmed, especially if we zoom out to a weekly chart here. That's looking pretty bad. Alright, thanks for being a part of swinghigh.com, and I'll talk to you later.